Also, Grover Norquist, he's president of Americans for Tax Reform. Gentlemen, great to see you. First to you, Grover. What did you make of Moody's not believing the president, saying all is safe in banking? It's saying it's downgraded its entire outlook on the entire U.S. banking system. It's talking about a rapidly deteriorating operating environment. We haven't seen this kind of move out of the credit rating agencies, Grover. Remember when S&P cut its rating on America's debt in 2011? That really angered the Obama White House.
Yeah, I think when you look at all the challenges, people want to think it's one thing here. Well, inflation and interest rates going up is a big thing. Many banks have bonds that are declining in value. That's a systemic problem. The whole regulatory approach, but Biden's also declared war on whole sectors of the American economy. We're going to eliminate oil, natural gas, coal. That's a lot of jobs. That's a lot of regions. When you threaten like that, I'm not surprised that these problems don't pop up in more places.
Yeah, to what Grover was saying, the Federal Reserve, it's a matter of oversight. If the White House is going to do all of its attacks on big business, David, this big story, the Federal Reserve says it will do an internal probe of why they missed Silicon Valley Bank collapse. It could involve San Francisco Fed Chair Mary Daly. She's pretty woke. We're seeing the unrealized losses at that bank and banks nationwide, more than $620 billion. Are they on the stick here?
Well, look, I think that the Fed's lack of oversight here is quite obvious, but I also think they did something far worse than fail as supervisors, and that is that they failed as the setter of monetary policy. They left rates way too low for way too long, and then they've been way too aggressive in how they've hiked up. When they break something, they have to fix it, and that's the problem, is that we're constantly asking the Fed to be in charge of our economy, and it has to stop. The reality is that Moody's is behind just like the regulators are. We're going to now look at the credit rating. We're going to now look at what we did wrong at the Fed. They're supposed to be in front of this stuff, not backward looking. I think ultimately that the bonds being underwater to their maturity value is not a problem if you can hold them to maturity. It's a problem when your liquidity is messed up because you have bad deposit base like Silicon Valley Bank did.
Yeah, a rotten deposit base. So this is an oversight issue. Grover, Barney Frank is saying you can't blame Trump after those bipartisan revisions to Dodd-Frank in 2018. Democrats were for that. Barney Frank is saying that does not stop government regulators and Fed bank regulators in their obligations to do supervisory oversight.
Right. The federal government is supposed to be doing this oversight, but the message that banks and the C-suites everywhere are getting is focus on climate change, focus on ESG, focus on wokeness. Those are the only questions they're getting. That's the push they're getting. When people toss rocks at them, that's what they're talking about. They didn't bother to ask them what their investments look like or to focus on that. I mean, we do have an administration that's not focused on growth or jobs or inflation, but on whether or not you're sufficiently woke. And the answer is they got a very good grade from the ratings on being woke and high ESG ratings, just not very good ratings on not going bankrupt.
Yes, so given what Grover is saying, David, I mean, they're throwing all this helicopter money, $20 trillion thrown into the U.S. economy since 2010. The White House has a banking crisis on its hand. The DOJ, SEC, joining the Federal Reserve, probing the collapse of SVB. Insider sales by several bank executives before the failure. And SVB's board, it's packed with Democrat cronies, only one at the upper echelon of investment banking. And now we're going to do a backstop of that bank? Now taxpayers could be on the hook for that?
Well, in fairness, though, we're not backstopping the bank. I mean, we really aren't. We are blowing up the equity. It's worth zero, and the unsecured bondholders are getting zero. But they are backstopping uninsured depositors.
Well, that's where the fees could come in, right?
That's a problem going forward because now why wouldn't anyone believe that there's going to be the same backstop for them?
Right.
And the reality is they have to specify, do we want to have FDIC limits or not? If we're not going to, let's figure out how we're going to pay for that. But if we are going to, you can't keep going back and forth.
But that's the
they're-
backstop.
In fairness, they're doing that to avoid
yeah,
the contagion.
I understand. But, the taxpayer will have to pay, and with higher bank fees, for that backstop, Grover, in what David is saying. I mean, the Biden White House, just without even the approval of Congress, just effectively deemed taxpayers to be on the hook for insuring all bank deposits like they're doing at SVB. No constitutional approval by Congress. So that's another standard that's going to drop. That means more bank fees that we'll have to pay for.
Government-enforced required fees are taxes. The president saying this isn't taxpayer money is disingenuous. When you say you must pay a fee, says the government, that's a tax that taxpayers are being hit with it. And I don't understand why the president won't own up to that.
Got it. Grover Norquist, David, it's great to see you, gentlemen. Thanks for joining us tonight.